Now to our market monitor, who favors companies that he says will benefit from strong emerging market growth. Joining us tonight is Alan Bond. He's co-portfolio manager of the Jensen Quality Growth Fund. Alan, good to see you again. Welcome back.
Hi.
I think you would agree that anybody who wants to invest in the emerging markets has had to be patient, waiting for growth in that area of the world. You start tonight with United Technologies, the diversified industrial manufacturer. Why that company, and how would it benefit when emerging markets do start to grow again?
Yeah, so United Technologies is a global industrial conglomerate with a wide range of capital-intensive businesses that range from aircraft parts to elevators and building construction materials. And the emerging market story with United Technologies is really helping those countries build out their infrastructure with things like elevators and escalators and things of that nature. We think United Technologies is a good story right now. The stock's been a little bit weak due to uncertainty around the company's announcement that it's planning on breaking up. But the business itself is doing very well, and we think that's important, and we think this pullback is a good opportunity for long-term investors.
Microsoft is also your pick. Why? How does it benefit?
Sure. So Microsoft is obviously one of the world's largest enterprise software companies with a host of products that are ubiquitous here in the U.S. and clearly around the world. We think that's a real advantage for Microsoft. And it's obviously a mature business, but they have kind of found the next leg to their growth story, which is their cloud software products. And we think they're very well positioned to help their existing corporate customers transition to the cloud, and specifically those that may not want to use Amazon because they view Amazon as a competitor. And we think that cloud revenue can propel the company's business and share price as we look forward here.
And the third one is Pepsi. The stock essentially has been sideways for the last few years. Why this one necessarily over, say, Coke, for example?
Yes, Pepsi is a very well-known business with brands that resonate with consumers around the world. And we think that brand equity is a very powerful competitive advantage for Pepsi. Relative to Coke, Pepsi is just a much more diversified play in terms of their product portfolio. Pepsi has been a bit weak. We think that recently that may just be due to the broader backup in interest rates because the business itself is doing well. We're seeing signs of acceleration in their top line, in their pricing power. And so we think this pullback may be a good opportunity to own shares in what we consider a very high-quality business.
Very quickly, of the emerging markets, which one do you favor the most?
Well, that's good. I think it kind of depends on what company you want to invest in. And for us, a lot of our emerging markets exposure is through healthcare stocks, where emerging markets are growing their healthcare infrastructure as they mature. And we're looking for companies that can help them do that. And it's a really good growth story for those companies.
So it's a sector story, not necessarily a geographic story. Alan Bond with Jensen Quality Growth Fund. Good to see you again. Thanks for joining us tonight.
Thank you.